Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Tuesday, the 6th of July, 2021. Welcome back. If you had observed U.S. Independence Day off the holiday yesterday, hopefully it was fun for you and you're back safe and healthy. This is episode number 2028. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Would appreciate a quick mic check. Sometimes I don't even know if I'm broadcasting when it comes to YouTube. So just give me a check and let me know that you can hear me. We had some trouble on Friday. Sorry about that. Had to go to Periscope for the broadcast. So that's where we're starting off from. So just let me know if there are issues hearing me. Let's take a look at the Convergent Trading pre-market summary sheet this morning. We are looking at a market that is mixed. You could see that that the percent change on the indices pretty much sums to zero. With the NASDAQ slightly up, the Russell slightly up, the S&P slightly down, and the Dow slightly down along with the European markets. Gold, silver, copper, the metals are pretty strong this morning. Crude oil, which is currently on the news due to the fact that OPEC Plus are not able to come together and decide on a quota. Saudi Arabia, as you see in the event risk, Saudi Arabia has decided to raise the price of crude for August crude for the United States and Europe. Crude had pushed up all the way up to 77 and has dropped to 75.12, 75.13 currently. So even though it seems unchanged, it actually has come off quite a bit. The 10-year notes, the 30-year bond, and the euro bond are up. We can see, again, allocation to risk, slight allocation to risk. This is why we say it's mixed. U.S. dollar off, euro off. The yen is stronger. The cable's stronger. The cable, yesterday, Prime Minister Boris Johnson said that they're really looking at removing restrictions, lifting restrictions entirely. The target date's July 19th. And then, of course, there's wage inflation pressure. You may have read about the fact that many fast food providers and restaurants and so on are trying their best to attract low-wage earners by providing relatively large signing bonuses to attract help. A lot of restaurants are running with half staff and so on. We're seeing a strong potential for wage pressure going forward. So wage inflation is likely to be something that's going to get attention. Generally, once you raise wages, it's difficult to bring them back down and keep your customers, keep your employees. One thing to note on this chart in front of you, of course, is this column right here. You could see the rotations have fallen dramatically. The rotations on those products, this is a very important part of the pre-market summary sheet. I strongly encourage you to get on Twitter, twitter.com/conv trading and follow. If not, to get those numbers at the early part of the week. Those numbers basically tell us where the volatility is. Those are based on 1 minute bars going back 252 RTH sessions. That's a year of trading. A year has about 252 trading days in it. These are the harmonic rotations for the various products that basically sets out where the noise is, in terms of placing stops and setting targets. So this has dropped dramatically. If you go to the pre-market summary sheet from a while ago, 6 months ago or so, you'll see that it was at 7, 8, 6.5, and it's coming back for the ES. It's coming back to 3, 3 being the historical value for the harmonic rotations. This means that the S&P tends to gyrate in 12 tick rotations normally, and it was part of how I trade. And as most of you know, especially those who are with us at Convergent Trading, we use this information to determine when a rotation's unusual or an impulse, and it sets up a continuation trade depending on context. But you see it for the ES, NQ, RTY, YM, and crude oil. All of them are coming in. Crude oil has ticked up actually from 0.19 last week to 0.2. Currently, the S&P has traded 121,000 contracts. The overnight inventory is mostly short by 60%. Not dramatic. The range is relatively tight, 11.25 points, with a point of control of 34.4075. Currently trading at 43.4075. Currently trading at 43.4175. So we're pretty much in line with the point of control, and we're pretty much unchanged on the session. The settlement is 43.4275. 43.4275 is the settlement price. Current volume and range are below what we would consider normal. So know that coming into today, of course, this is a short week because of the holiday yesterday. A lot of people are off this week. You can pretty much get a 9-day holiday for the price of 4 days this week. So I'm sure many traders and their families are off, expecting it to be relatively slow this week. Nothing really dramatic expected this week now that we have non-farm payrolls behind us, but also the day after non-farm payrolls traditionally, and I've been proven wrong this year a couple times, traditionally is a sideways quiet day. Just know that coming into the session. What's on deck today? We have U.S. Market Services PMI final at 9:45, the composite at 9:45. Then we have ISM non-manufacturing PMI at 10. The IBD tip, which is kind of a lower tier figure, also at 10. And then out of Australia, the AI Group Services Index, and then vehicle sales this evening. That's what's on deck for today. Since the broadcast didn't work on Friday, I don't have a review segment. But what we're going to do is review the action itself. So let's do that. Let's take a look at what it did on Friday as we open up. So we had a strong number on Friday. We ended up pushing higher. The trade was long. The SOC was 43.14 quarter, something like that. I don't remember the number, but somewhere in that region. And we open up at 43.22, push up to 23.50. Drop to 43.19 right up here, and then we break higher. So what we had on Friday is a gap. We had given the fact that we have an opening swing high and low means that we have an open auction out of range. And the important thing to look for, and I talked about this on Friday, the important thing to look for is, does it fill the gap in the first hour? If it doesn't fill it by the second hour, then there's a very low probability that it would fill it by the end of the session. So long side gap rules apply, long side only on Friday. And so we're looking for it to push through that 43.2350 opening swing high and to continue higher, and that's exactly what it did. We have a nice little breakout higher. We set up a single print at 43, 20, 25, 75, something like that. And then again at 43, 27, 50. And it's all long. Look at that. It's just runs right up there. Finally finds some balance in the 41 zone, and then it pushes to 47 and goes sideways. I did leave early on Friday. Enjoyed a nice afternoon at Soho House at the pool with my wife. Just a little break. So I missed all of this action here. What we ended up with on Friday is a double distribution trend day, a double distribution trend day. Look at the yellow lines. The initial balance was relatively tight, just 6.25 points, 6.5 points, and we rallied multiple times that. This is a traditional characteristic of one of the characteristics of a trend day. We have a gap and go situation on Friday, so we have a gap that we left behind at 43.19 to 43.12. And the gap mids at 43.15, expecting that's a weak structure that we're expecting to see get tested sometime soon. So that's where Friday ended up. Looking at the overnight action, notice that I've removed yesterday's trading from 8:30 Central till the close. Just dispose of that data. It was inside of the overnight session for today, so that data is removed. But overall, we pushed higher. We continued the trend. Trend days act as an impulse, and in general, the following day is either a high. Let's talk about a trend day up. If we finish strong on a trend day up, the next day is expected to be a high flag. In other words, holding the upper end of the range in the next session, or we expect it to continue higher. We expect it to continue higher the next session. So an impulse continuation type setup. Today, I'm expecting it to flag. I'm expecting it to go sideways and hold steady in the upper range, for today's session. So that's where that stands. We pushed Friday. We tried to push Friday's high. We pushed it by 4 ticks to 43.48, and have pulled back to 43.36.75. The full session overnight stat includes Sundays. Remember, today's session really started on Sunday. And so the overnight low is 43.33 even, 43.33 even though the summary sheet says 43.36.75. Because of the holiday, you take the lower overnight low, which was 43.33. And 43.33 actually pushed all the way down to the first single print. So if you look at it, this is 43.33 right here where this line is. That's the first single print on the way down. So it filled these single prints in the overnight session, but they're going to stay on our charts until they get done during the day. The second single print's at 27.50, and the third is at 25.75 down below. I know yellow doesn't look good on this chart, but you catch my drift there. Pulled back to a pretty logical spot, found a base, and pushed higher. We pushed the overnight high by 4 ticks, so relatively bullish action so far. Going and looking at what we've got in the composite, if we look at last week, you see the color change there because the month ended right here in the dark gray, new month in the light gray, and very, very healthy one-time framing up on the weekly. We started the one-time framing the week before. Last week, we held a good base at 42 in the 42.90, 42.85 or so, put in an MC point of control, and we have pushed up since. Look at last week's profile. That says a lot. Last week's profile says active price discovery. There is no balance last week. If we finish the week strong and we have not found balance, it's very, very likely that we will continue, would continue this week higher to find that balance. We're within earshot of 43.50. We missed it by 2 points in the overnight session, and that's the next major figure. So today, I expect it to hold steady, hold inside of Friday's range, hold in the upper portion of Friday's range. It would be nice if it turns over and takes all of it back and fills the gap. That would create an opportunity. But the more likely scenario is that it holds the upper range, the 40s, and it kind of squeezes that 47 to 50 or so, given the construct that we have here, the structure that we have here, or the context, narrative, whatever you want to call it. We have a market that has gone from balance to imbalance, and it has not established balance yet. So at the moment, we don't have any micro composites. Going forward, the market's got to turn on itself and retrace for us to start seeing this as a market that has pulled back and created balance. So again, warning, it is the day after non-farm payrolls, with the exception that it's not Monday because of the holiday. And generally, it's fairly quiet. The market goes into this digestion mode. And we didn't let go of the upper end of the range after a trend day, expecting balance at the upper end of the range or a flag pattern to a push into 43.50 above. So if you're someone who's short-minded, you might want to reconsider. Let's take a look at what's expected for today and get you on your way to finishing your prep. All right, so here's what we have. Okay, so notice the one volatility sigma right up here. That's a close-to-close sigma based on RTH prices or settlement prices only. One thing I want to remind everybody is that I have, because of the changes at the CME, the removal of the 15-minute halt from 3:15 Central to 3:30 Central, the fact that settlement was moved to the last 30 seconds of cash close, I see no reason to carry the last 15 minutes of what used to be the pit close. The pit close. And so we want to, what I've done then is I've moved my RTH. I'm shifting my RTH session to finish with cash. So the futures in cash are in line. Finally, it's been 32 years or 33 years since this product was launched, and we finally have cash and the futures in line. My volatility sigma lines, the first sigma or the first standard deviation and so on, these are based on settlement prices now. Again, settle is 42.75, 42.75. So overall, this is the extent to which we believe the market would reach to close under normal conditions. But that's a lot of distance there. This morning, we're opening inside of the high distribution, high volume node on Friday. We built an overnight high volume node on top of Friday's action. The market is in balance up here. So the expectation this morning is an open auction that is likely to push down into the lows that were created overnight. But overall, I'm expecting it to hold here and squeeze higher into the 43.50. So above us, we have the mid-century figure at 50. 54 is a measured move, a simple measured move. and so on. And that's the extent of it. I'm looking for it to have a 12 points of range, but overall hold steady and sideways imbalance today. The secondary scenario is the opposite. Open auction, push higher, squeeze towards that 43, 47 high from Friday, potentially get to 48, but overall fail to continue against the 50. Again, looking for this 50, consolidate at the overnight point of control and push lower before it goes sideways. We are in the depth of summer. Don't expect too much from your trades. This is why the rotations have squeezed in. 3.5 points is 3.5 points is the harmonic rotation of the S&P. So look for 2.5 points, 3 points on the outside for targets. Is how I'm approaching the market. You could trade slightly bigger size as a result, depending on your account size, but overall, don't have huge expectations for your trades. I'll let you go. It's been 20 minutes. Have a good day, and I'll catch you tomorrow. If you're a Convergent Trading member, don't forget we have our trade talk today at 1 p.m. Eastern. Take care, and I'll catch you tomorrow morning. See ya.